And we are live. What's going on, everybody? Welcome back to InvestQ Live. And in today's video, we're going to be talking about some of the similar topics we typically do. So first off, we're going to be covering the broader market news like we talked about. And speaking about the broader market, you got the S&P 500, you got the S&P 500 and the NASDAQ. They definitely did get hit hard today as they were down on the day overall. And they are also down on the overnight session as well. You also, if we take a look at the FinViz heat map, you're also going to see that technology and the semiconductor sectors and everything in the technology sector did get hit hard as well. Speculative stocks as well were under pressure, and Nvidia dropped more than 3% on the day. Microsoft as well fell more than 3% as well, and Amazon, you see right here that right now it dropped over 2%, currently at a loss on the day of 2.53%. And at the same time, treasury yields, if we take a quick look at CNBC, you're going to see here that treasury yields did push up on the day, but currently right now they're down overnight. And if you do see here, you're going to see in the headlines as well, you're going to see that there was a rise in oil. Now, a lot of the headlines today were covering the Middle East tensions that are continuing to circulate. In fact, check out this. Oh, pressed the wrong button. Sorry, guys. Let me just back that up. Yeah. But again, there's rising tensions in the Middle East. So a lot of the headlines are relating to that. And the question is becoming, with people that do pay attention to the broader market, people are going to be asking, is this just a normal pullback, or is the market starting to tell us something even bigger, something bigger that's going on behind the scenes? Well, not necessarily behind the scenes, but is there a bigger picture that you guys got to be looking at? So tonight, both me and you in the InvestQ family, what we're going to be breaking down is we're going to be looking at treasury yields, the broader market sell-off, small cap AI stocks, the new article that came out on the CTM new S-8 filing. And by the way, no biggie. I know you were interested in Black Sky. So first off, I am going to be covering that today in this live stream today. And I also am going to be posting a video on Black Sky on Friday. I know you're interested in that, so I do got you. I got you at no biggie. So yeah, don't worry. I didn't forget about you, my friend. The next thing we're going to be talking about is the Black Sky latest contract and what I'm personally going to be watching tomorrow. So let's get into it together, guys. Now, when I started looking through the market after the close, I noticed some pretty interesting data points. Most of the names leading this rally were suddenly red. You're very welcome, Biggie. And if you personally own growth stocks, small caps, AI stocks, or speculative names, you probably felt that weakness today. And the point isn't that stocks went down, but the point is why they went down. Because they, as in the market, the institutions, the hedge funds, and not mainstream media. I won't necessarily mention mainstream media for this specifically, but just those three people, those 3 days, the market, the institutions, and the hedge funds, they're the ones that are constantly repricing risk. Excuse me, guys. So when yields do rise, as they did today, they're not up right now, but they were up during the market hours. That's when you usually see speculative stocks start to struggle. And the market, it doesn't move because of headlines. It typically moves because of execution. And price does tell you what investors currently are thinking today. And the fundamentals tell you what they may be thinking tomorrow. So let's take a look at the FinViz heat map. Let's look at that together. So you're going to see there's lots of red. So even before I even take a look at the heat map, again, in the broader market, the S&P and the NASDAQ were down on the day, as well as the Dow Jones. So if you see here, technology was mostly red. Nvidia down 3.62%. You got Microsoft, it was down 3.17%. Then you got Amazon down 2.53%. Apple as well, down 1.57%. And you got Google as well, just down under 1%. So not a big bearish day for Google, but still it is down on the day. And meanwhile, you're going to be looking at other sectors as well. Like, for example, take a look at energy. You're going to see that Exxon and Chevron are in the positive. They're end of the day with a gain on the day. And what I want you guys to understand, because a lot of people, especially from the more beginner perspective, people do think of this as whenever they see a loss on the day in the stocks that they personally own, one question that has been asked is, where does the money go? And the answer to that, it does not disappear anywhere. What it does, with the heavier handed, with a lot more capital in their pocket to be able to invest in those types of institutions and hedge funds, they just take that money out of a more risk on sector and put it to something more risk off in this scenario. So, and why that would be the case, and again, this is just hypothetical, because we have seen days where bonds like the US 10-year Treasury yield, they've gone up and they've gone down. And the hypothetical thesis is that whenever they go up, people have the idea, well, it is true, that's how it's supposed to work, but it just doesn't always work that way, is that when it goes up, that's when you see speculative stocks fail, or not fail, but when they start to struggle intraday. That was the case today. And the thing is, again, it was up on the day. I can't go back in time to say what the actual pricing was earlier on the day, but I do remember that it was up. Again, you don't have to believe me. You can take a look at the price action yourself. But when there are higher yields, that creates competition for stocks, and it makes even harder competition for the speculative names. You know, anything in the AI technology sector, quantum, growth names, some of the defense, these individual stocks in the defense sector, like BKSY, for example, those smaller cap stocks usually get hit harder. And rising yields are like gravity specifically for higher valuation growth stocks. Because, real quick, taking a quick look at some of the headlines, you're going to see here, one second, yeah, you're going to see here, we got a little bit of buffer, hold on, let me back this up for you. CNBC can be a pain in the ass sometimes, but yeah, okay, so here we go. So first off, the headline we got right here, the S&P 500 futures fall after index snaps 9-day win streak amid rising Middle East tensions. So, and then there's a few other things related to oil. Let me see if I can find that specific one. Let's see. So I can't find that specific headline right now, but there were headlines today relating to the oil holding, the fact that oil was holding relatively strong on the day, the geopolitical uncertainty at the moment, and the market becoming more defensive right now. So I want to know, in your opinion, do you believe that this is just noise? Because there's lots of things that are going to be happening intraday as long as the market is, here for people to buy and sell shares or to trade. But do you think it's just noise short term, or something investors should actually be paying attention to? Now, the first topic I want to go over is none other than the Castellum CTM SEC filing. It was a S-8. So it was a Form S-8. So investors, they immediately saw the first thing that I'm going to be highlighting for you right here is this number right here, 4 million shares. That's the first thing that stood out to investors that pay attention to Castellum CTM. So many people were asking one question, and it was the main question that I noticed. Is this dilution? And a simple explanation for what an S-8 form actually is they're primarily used for employees, executives, directors, and consultants. What it is not, what an S-8 form is not, is an at-the-money offering, convertible debt, emergency funding, or traditional capital raise. So I'm going to go more in detail about this form right now, but just to give you a quick summary, this form was not necessarily something that investors and shareholders of Castellum CTM should be absolutely frantic and panicking about. I want to state that right now. Now, if we take a look at the 8th page of this article, okay, so a few key points. The additional 4 million shares, and That's the main highlight of this. And then on pages 12, 17, and 18, you're going to be seeing some stock incentive definitions. So just take a look at what you see here. You got incentive stock options, listing date. You got things like stock award agreement, stock bonus award. And then if you take a look at page 17 and 18 as well, you're going to get some of those definitions as well as on page 18. Now, what caught my attention personally, and what should catch the attention of the investors, was the language they used on page 20 relating to mergers and acquisitions. Because I want to be clear, even though that I did like the language they used, this does not necessarily mean that they announced an acquisition. They did not complete the accredited acquisition that they have mentioned yet. I'm not saying they can't. I'm just saying right now that's not what this article means. But it does show incentive plan supports future transactions. So this ties into Glenn Ives' comments and just the positive type of mindset that they had in the annual shareholders meeting related to their belief that they will be able to complete an accredited acquisition. And my personal take on it, if I was to summarize it, I would say that today isn't necessarily about the big highlight that most people were interested in, which is this big number right here, the 4 million shares. It's what management ultimately does with them. And check out the video that I just posted on this where I do a deep dive on the article. But in the live stream I'm going to be talking about with you is the questions that people should be asking is mainly, can Castellum CTM grow APR? Can CTM win larger contracts? And can CTM execute and get and complete that accredited acquisition? In my personal opinion, that's what matters more. So let me know what you are looking for when it comes to Castellum CTM. Now, the next topic I want to talk about is small caps and AI stocks getting hit hard. And don't worry, no biggie. After I cover this, I'm going to be covering Black Sky for you, buddy. So don't worry about it. But just taking a quick look at some of the things we saw on the day, Big Bear AI got hammered. A loss just above 5% on the day, specifically at 5.48%. You got CTM. They had a loss of 7.65%. SELLOFF, they had a loss almost at 7%, and other quantum names as well also struggled. QBTS struggled. Inflection, they also struggled. They had a very bearish day, over 12%, almost, they had a 12.38% loss on the day. So the questions that I want to be asking is the fact that, I talked about the $5 price level, and we did close below $5, and we're currently intraday. We closed below $5 at $4.83. Now, do you personally think that Big Bear AI will be able to recover to the $5 level anytime soon? And when it comes to LAES SELLOFF, there was recent weakness despite strong long-term narrative. And by the strong long-term narrative, I'm talking about the PR that came out for the company. If you take a quick look at the articles we saw, again, last week they had 3 investor relations PR reports, and they had 2 more that came out today. Let me see. Sorry, guys. So LAES, and then I just type in investors relations right here. Let's check it out. So, and again, part 1 was for the mergers and acquisitions. Oh, and they had another one that came out today as well. So again, I'm going to be posting another video for SELLOFF. It mainly was going to be covering the acquisition that they discussed, and the majority investment in the WeCan Group and how they acquired Mirax SA. But now there's a new article that I'm just aware of right now about how SELLOFF participates as a lead investor in Quobly's 115 million euro series, a financing via SELLOFFQuantum.com. Okay, so be on the lookout for a video tomorrow for SELLOFF, as I will be posting that. Now, I already talked about quantum stocks, but the last thing I want to mention before I go into Black Sky is when money gets nervous, speculative stocks feel it first. And the strongest stocks, in my opinion, are the ones that hold support during market weakness. And red days also are what reveal conviction and the investors that actually have a long-term thesis for the stocks that they hold. Now, last but not least, for the individual stocks that I wanted to cover is none other than ticker symbol BKSY, Black Sky. So let me just pull it up right here. Shout out to the Prophecy AI app and Claude giving me a bullish 1-year projection with the price target of $43.19. But besides price action, because again, we did have a pretty hyper bullish day, it was a 14.64% loss on the day, and they even went lower, currently down a little over 1% on the day after hours. So let's forget about the price action right now. The specific thing I wanted to talk about was the recent news that came out. And let me just pull that up for you right now. So Black Sky, what it announced was a multi-year renewal 7-figure contract that had to do with AI analytics expansion, space domain awareness, and future non-Earth imagery services. And why this matters and why investors should be paying attention to it, and I know for a fact that Biggie in the comments is definitely paying attention to it and is something that he was very interested in talking about. And again, I'm going to be posting a video on Friday going in a deeper dive analysis on the articles that were released. But the contract size, even though it's pretty big contract size, there is a bigger story to this. It's the direction, because the customers, they renewed, then expanded. So after they renewed, they expanded. And what that suggests to me, what I hear in my opinion, is the fact that there's product validation, growing trust with Black Sky, and expanding capabilities. All green flags for the company, for Black Sky. And my personal take is that revenue gets attention, but validation is what builds conviction in a stock. And the contract is the headline, but the technology is also the story with it. And for you investors that do hold Black Sky and any other speculative, well, Black Sky is not as speculative as something like CTM or BKSY, but space, I would say, compared to other areas like healthcare, or, you know, if we take a look at the Finviz heat map, you know, like healthcare or energy, for example, it's a lot more speculative compared to those names like, you know, Exxon and Chevron, for example. But for the people that do hold Black Sky, price action alone is not what you pay attention to if you're a long-term bag holder of any stock that is related to space, AI, any type of risk, is a little more risk-on asset. Because if you do pay attention to just the price action, I could only imagine how much you panicked today. Let's take a look at Black Sky real quick, because again, look at that big bearish naked red candlestick chart. If you just paid attention and you were one of the FOMO buyers that bought up at the highs, and now you're seeing this price action, you're definitely going to be one of the people that panics. You don't want to be the people that panics. You want to have proper amount of capital on hand to take advantage of opportunities when they appear themselves. So basically having the capital in a savings account or a checking account or whatever, ready on hand to buy on big dips on a company you have a long-term thesis on. So basically you're buying heavy amounts of a stock, shares of a stock at a discount price. So, and then it's not necessarily set in stone. It's not black and white, because different stocks have different long-term theses and people have different convictions on a stock for different things. Like, for example, I'll give you two different names, CTM and BKSY. I have conviction long-term on both of the stocks, and I don't get shaken out with the volatile price action, but it's for two different reasons. Castellum CTM, it's a lot less known compared to BKSY, for example. It doesn't get enough attention, and their financials continue to improve with the specific metrics I'm going to cover, like backlog, revenue increasing. They're getting very close to becoming consistently profitable. They eliminated a majority of their debt and a few other key metrics for Castellum. So I am a long-term bag holder for Castellum, because I believe I'm getting in first before other people get eyes on the stock, because their business continues to improve. But when you look at something like BKSY, It's a little bit of a different story because they got the AI narrative, the defense, they got real world market usage with the technology they have in the airports, and they do get partnerships, but their quarterlies, and especially compared to Castellum CTM, their quarterlies and their financials are a little more shaky. And people view it more, for the people that have conviction in Big Bear AI, is they have heavy belief that the fact that they're in defense, which is a heavily funded market by the United States government, it's a heavily funded market by the United States government, is going to continue to get funded, and it's going to continue to have high demand in the long run. And even though the financials are not where they want to be right now, they believe in the long run they're going to show consistent profitability, and their revenue is eventually going to keep increasing. So key differences is the fact that the first one is with CTM, the business is already proving right now, and their revenue and the financials are looking good right now. It's just the only thing that's holding it back is institutional interest and not enough eyes on the stock. Big Bear AI, there's a lot of interest in it right now and a lot of eyes on the stock, but there's more uncertainty with it. I hope that makes sense to you guys. Thank you very much, Alicia, for the compliment. I appreciate you. Thank you. And Biggie, I appreciate the compliment as well. Now, so I just wanted to point that out, as for people that are long-term bad holders for Black Sky like Biggie, people view and have convictions and long-term theses for different reasons. But as long as you have that conviction and long-term thesis and allow it to play out on a long enough time frame, don't get too tripped up on the price action, especially when there's good developments on a stock, especially like what we just saw on Black Sky with the 7-figure multi-year renewal contract that they just got. Now, a little bit of a hot take for you guys is, if yields keep moving higher, small cap and AI stocks could stay under pressure short term. And I don't really trip up too much over short-term momentum to the upside or downside, especially on this channel. We look at things with a more long-term viewpoint. And the second thing I want to cover, or a little bit of a hot take, is what I said with Castellum CTM. CTM investors are probably, for the ones that did have a more panic type of emotion, CTM investors probably did overreact to the S-8 filing, in my opinion. For the ones that panicked or thought it was crazy dilution, because I did hear some people say things like that to a certain degree. And the third thing I want to say is that with Black Sky, shout out to Biggie, Black Sky is becoming one of the more interesting underfollowed defense space names in the market right now. And personally for me, my stock of the day was Big Bear AI. What should my stock of the day be? Because everything was pretty red on the day, especially in my portfolio. You know what? What I'll say for you today is there wasn't necessarily a stock of the day. Not because everything was red. Not that I'm panicking, but I wouldn't necessarily give a stock of the day. I would say, you know what? Actually, let's give a stock of the day to SELLOFF, because even though they did have a unrealized loss on the day, 8%, they were down. How much was it again? They were down, let's see here. They were down, SELLOFF was down over 7%, but even though the price action was negative, that doesn't reflect the fact that they still have more developments, PR-related developments for the company. So I'll give it to SELLOFF. And the bull and the bear case for SELLOFF, the bull case obviously, it's in a very hyped up market with quantum, but the fact that they're not just a pure quantum play, they're heavily involved with cybersecurity, defense, semiconductors, and a few other things that they're involved with. They continue to position themselves in a way where they're going to be successful long term, that I personally believe. And even with the negative price action in the broader market and the more risk on assets, we still are getting very positive news articles for the company. But the bear case for it is the fact that people are still worried if they can execute on what they want to, if forward guidance is going to continue to stay positive the way it did in the last report they had, and if the narrative of this company continues to remain the same, as instead of it being something that's performing positively now, if it stays stuck in the we're going to do positive things for months and years to come. Those are the risk and the bear case associated with SELLOFF. And what I'm personally going to be watching tomorrow is the treasury yield movement. Is it going to stay high and make borrowing costs a pain in the ass for the more speculative names? Oil prices, what are they going to look like tomorrow? Because they were green on the day. Nvidia, is it going to continue crashing? Can Big Bear AI get back above the $5 level? And I'm also going to be checking to see what happens to CTM as well, and for more developments when it comes to BlackSky. And that's my take on the market today. Now I want to be hearing from you guys. Is this pullback a buying opportunity? In my opinion, yes, if for all the stocks in my portfolio. Are yields the biggest risk right now? And disclaimer, this is not financial advice, but it's just my personal opinion. And is the CTM S-8 filing being misunderstood? And lastly, shout out to Biggie again. Is BKSY BlackSky becoming one of the most overlooked defense and space companies in the market today? Drop your thoughts in the comments below and let me know what you want to see in future upcoming videos. And if you do enjoy the content, feel free to hit the like and subscribe button, as I do appreciate giving all the content that you guys want to see, and I love the love from you guys. But besides that, guys, stay safe, keep making good decisions for your long-term portfolios and sticking to your long-term plans. And I'll see you on the next live and in the next video.